What is going on, y'all? How's it going? Welcome to Trading Night School. More price action trading tonight. We're going to be talking about price action trading on the FOREX. This is FOREX 101, how to trade the FOREX. Huge lesson tonight on how to manage bad trades. I'm going to give you some ideas for managing bad trades. All right? Teach you some lessons I've learned along the way about how to cut a trade and when not to cut a trade and things of that nature. So, how are we looking here? Let me see if I can fix the camera angle just a little bit. There we go. If I turn it this way, does that look weird to anybody? Um, oh, I got to be over here. All right, there we go. All right. Looking at a position in AU right now, which is in the negative, but I'm going to show you it's a bad position. I'm going to show you what I did to mitigate it. Looks like Bitcoin's getting a move down. You guys want me to do a little TA for Bitcoin, don't you? How many of you guys are ready for Trade Night School? Y'all ready to rock? Give me a thumbs up and give me a or ready to rock, and I'll do a little Bitcoin TA while you guys are waiting. While we're waiting for people to come in. This is what I'm seeing right now. The structure here, I've got a three wave down, we got a three wave up, and now we're getting a three wave to the downside, I believe. That's one way to look at it. The other way is that this is a three wave, this is impulse, and this is a three wave down, and then we're going to get a move off of this. So that's two ways. It's a bull and a bear. Bull and a bear. What's up, Aaron? Hi, guy. What's up? Rob, how are you, buddy? um, so yeah, this looks kind of like an impulse wave a little bit, but also could be corrective. Um, so guys, so one of the secrets to my TA is that I try to identify corrective waves and impulse waves. And so there's a corrective wave. This could be an impulse wave, but this is not an impulse wave to me. So this is an impulse. It's five waves, but it's one, two, and then we've got that. So looks more like a W, X, and a Y right there. And so now we've got this, and I'm expecting that to finish out our WXY. So that's the way I'm thinking about this particular wave. It's going to it looked really bullish, and then it's kind of turned around. How many people started going long up here? Okay, so it's starting to dump. I think it's going to continue down to this region, down to structure. Guys, it could continue trending, so we'll have to wait and see. Um, this might have been the last hurrah, and then we got an impulse off the top. Even though it was the top was not as big. Excuse me, my nose is itching. So anyway, yeah, I see a move down here at least, most likely. That's my first count. The other option is we've got a 1 2 1 2 1 2. We got three nested 1 2s, and then it's going to be a gigantic, huge, big time candle going up. So that's the other option. So that's the big bull count there. 4 hour chart. What's it saying? Um, you can see that we've gone straight up without any correction at all. That's what's made this move very difficult to trade. There's been no pullbacks. I mean, there's been no real retracement. So if you didn't get in down here, you had no confidence really to get in anywhere. I mean, look at that. It's just straight up. So this is the first real pullback that we're seeing, and so we want to see some follow through on it. So chances are, if this is a five wave move of some kind, we got one, two, three, getting four and five like that. So we're going to come down here, finish the fourth, come up for five. And that would be a five wave move to finish. If this is just a three-wave move like this, we're finished. We've topped, and we're probably going to head down. Wave structure, I don't think is pointing to that though, personally. So just doing some quick Bitcoin TA before we start trading night school, guys. Just doing some quick Bitcoin TA. Okay. Uh, no divergence yet here, guys. No divergence here. 1, 2, 3, 4, 5. I mean, so right now we got three waves put in. We're getting the fourth. You can count waves on the RSI, guys. I don't know if you've ever tried it, but try to count waves on the RSI. 1, 2, 3, 4, and 5. Most likely, we're going to come down and then get another. Unless this turns into a running flat. A running flat would suck because they're hard to trade because you have no confidence to enter. So if we get a running flat, it's going to be like this. Whoa, a three, a three, and a 5. That's not going to be a 5 though. That's going to be a 3 wave. It has to be, and then we're on our way. I don't think it's going to be a running flat. So throwing the fibs on it, guys. We just throw the fibs on the first move. Back to the second move. 1-to-1 extension comes right to structure here, and the 127 comes right to structure. So kind of looking like, you know, let's throw the fibs, the retracement. Just the third wave. The 382 is confluent with this structure right here, so the 382 makes a lot of sense for this to come down to the 382 area, 50% area, and then back up. We already have hidden. This is the 15-minute. Let's look at the 1 hour. Come on. We have hidden bull divergence here on the 1 hour. We have it on the 15-minute as well. Down in the RSI, up in the price action. So hidden bull divergence is present. I would expect this to come. I would expect this to come down a little bit farther, come back up, create divergence. Whoa, come on! One more spike up to the upside, create divergence up here and up here, like so, and then we crash, and then we come down bigger. That's what I expect based on RSI, based on what I'm seeing. 11.5 is my target if we go up for 5 waves. 11.5, I believe. Let me pull the fibs on that. Go to the 1 hour. Let me pull the fibs there. Yeah, 10.5 actually, 10,500. That would give us a 5 wave move. That would be 1, 2, 3, 4, and 5. If we get up to 11,500, which I have a target, that would be an extended fifth. We'd have to get an extended fifth wave, which is possible, but we'd have to get an extended fifth to get up here to the 11,000 region and then down. Okay, there we go. There's all right. I'm gonna look at ETH real fast for Rob. He's my brother. Not my real brother, but my brother in the Lord. Um, let's see here. There was hidden bull divergence right here. It played out already. Now this has come down. It's creating more hidden bull, most likely, as long as this doesn't break. If we get a big dump, then no. But if as long as this stays up here, and the RSI comes down here, we'll still have another move to the upside for hidden bull. That's what the RSI is showing. We do have the We do have the 127 up here waiting to be hit. We've hit the 1-to-1 extension, but we got the 127 up here to yeah. Downside target, Danny, is let's see, downside target. If we have a if we're getting a WXY, yeah, there we go. Um, if we're getting a WXY here, oh come on, the 382, which is uh, 94 roughly, 9400, 90, 93, 92. If I put the fibs on it, just run the fibs. You gotta learn to do that. I've got tutorials on how to do it. Trading night schools. 94.61, 93.50. That and there's your two targets there. If it's a WXY, we've been hitting the 786 a lot, front running it. I don't know if we're gonna hit the 786 on this one or not, but I think we could dump down to here, and then off we go. All right. Um, yeah, ETH on the daily is definitely downtrend. We haven't broken the high yet. It's clear. It's not as overextended like Bitcoin is. It's more like a three wave move that comes very corrective, and so Max, you're right about that. We got it's more of a you know, and then I guess Max, you're saying the downtrend has kind of started already. Let's look at it. 15-minute time frame. Um, oh no, maybe not. No, that's three wave. That's impulse. That's three wave. Yeah, I don't know if we're gonna get another one or not. So be careful, guys. It could just dump from here, just completely dump. So I'm short right now in Bitcoin. We're gonna watch that. We'll leave the chart up and we'll watch that as it comes. Okay. All right. That's all you get. Sorry, that's all you guys get. Hey, let's look at Bitcoin. She's coming down. I'm gonna eat my pizza while. PEP. I'm not sure I can give you that target. Just watch the target for Bitcoin, and whenever Bitcoin reaches its target, ETH has reached its target too. I'll tell you what I'll do for y'all. I will I will do ETH tomorrow morning for my YouTube video. Okay, I'll do ETH and Bitcoin. I'll start with ETH. Okay, that's the best I can do. All right, this is Trading Night School, guys, and we're going to talk about mitigating bad trades, and we want to talk about price action trades. If you missed last week's um, lesson, guys, even if you're trading just BTC, if you missed last week's, we're learning how to trade on the forex, guys, and I've given. But these principles that I'm teaching on the forex work for Bitcoin as well, and I want to show you how I mitigated this bad trade today that I took, and I waited it out, and I'm going to tell you why I waited it out, and I want to try to give you that. Um, but anyway, if you haven't watched last week's Trading Night School, it's pure gold. I mean, it is golden. You pay a lot of money for that information for other people on other channels. Really, the information I gave was phenomenal and important and very, very valuable. Um, Eventually, I'm going to take it down and I will sell it eventually once I go full time. But you're getting it free right now because I'm building the channel and I want to build. I want to give you guys. You guys are helping me, so I'm helping you as well. So that's one of the reasons why we're doing this. And I'm benevolent and I'll have a lot of fun doing this. So anyway, um, are you guys gonna be able to pay attention for trading night school if BTC is moving? I'll keep an eye on the price. Keep an eye on the price. All right, are we ready to go? Ready to go. 32 of you here. I'm sure that's going to dwindle because most of you are here for the TA and not the trading night school. But I wish most of you are here for the or more people would come for the learning how to trade rather than so you can learn how to do this stuff yourself and look at the charts and come up with the same things I come up with. It's not really rocket surgery. Anybody can do it. You can learn to do it. Listen, if an Aussie named Maximilian Underwood can do it, anybody can do it. I'm just playing, Max. I was really, really pleased, Max, to see your video today in the green chat. That was pretty awesome. Thanks for doing that, buddy. All right, all right. I'm going to remind you to do a little. I want to do a. That's okay, Porky Pig. Struggle and do your best. What's up, Tara and Julman? Let's get rocking. Um, so I want to remind you of the lesson we did last week, and then I want to talk a little bit more about price action trading a little bit. Okay. And then I'm gonna show you one other strategy you can use. I showed you a really really good entry strategy last week. That was um, yeah, Tara. This will be recorded, so if you're too tired, just go on, and you can come back and watch it when you're fresh. So don't worry about it. Really, but you don't have to be here for the live for sure. Um, TA is a life skill. I'll tell you what. I've been learning. I've been doing this for 3 years now, and been growing ever since. And even this last year, I've been doing this YouTube channel. I've grown in my abilities, and so anyway, it's good. All right, so let me remind you of the entry we talked about last week on the 5 minute chart's really good. Again, my trading style goes for anywhere from 10 to 30 pips per trade. Okay, I'm looking for 10 to 30 pips, and that's in that ballpark per trade. Okay, that's kind of scalpy, but I've got a spreadsheet that proves the point. That kind of shows you what you can do just making 15 to 30 pips per trade. Okay, if you're trading a standard and you get 15 pips, that's 150 bucks. Okay, let's do the math really fast. Okay, $150. If you do 5 trades a week, like for 15 pips, you're gonna make $750 a week times 4 weeks. Okay, it's $3,000 a month. Okay, can you handle $3,000 a month times 12 months? If you can do that consistently, you can make $36,000 just making 15 pips a day. That's it, 15 pips a day. Um, so if you're trading 2 standards, you'll double that. Okay, but you got to learn how to trade it, right? You've got to learn how to get 15 pips. So anyway, so I'm teaching you a style here that's teaching you to trade for 10 to 30 pips. Okay, whatever the market gives you. Okay. All right. So I want to talk about the entry and the engulfing entry. Okay, and we'll just remind you. Okay, so let's look at this market right here. Right there. Boom. Okay, so market was trend. Oh, come on. Market was trending down, trending down, trending down, and look what we got right here, right there. We got what we call the engulfing candle. Okay, let me zoom in just a little bit so you can see it. Make the screen bigger. There we go. We got an engulfing candle, and what that means is um, we got a um, a candle that engulfed the previous couple of candles. So it's an engulfing candle. Now, that to me is a trigger. Is a trigger for the end of a what do you call it? The end of a trend or end of a run. Okay, when you see an engulfing candle, it needs to have closed and it needs to be pretty much green, the opposite way of the trend, green or red, just depending on which direction you're trading it. Okay, and so here you got an engulfer here. Okay, and then you got right here in this one you got a retest of it on the next candle, 50%. This was your entry. Okay, this would have been an entryway. Okay, so when you get the engulfing candle and then you get a retest of it, 50%, that's your entry point. Okay, once you enter that trade, um, let's see, boom, boom. You would have this trade would have gone for 13 pips. Now we wouldn't have known this at the time how far it was going to go, right? But we just know that it was at the beginning. But you also have to know at the beginning of a trend you're going to get a move to the upside, then you're going to get a three-way back. Well, this one actually would have stopped you out. You would have stopped out in profit because basically you would have entered around here somewhere and you would have gotten 13 pips, 10 to 13 pips here, and then it would have started coming back. Now you could do one of two things. You could have taken your profit, or you could hold the trade. But at this stage, you're break even and your stop. Once it got down here, it stopped you out. That's okay. That's not. And what do we say, guys, when we get stopped out? Break even. Okay, so we enter a trade, it's going our way, it's doing a thing, and then it comes back, we get stopped out, break even. What do we say? What do we say to ourselves? What do we say to our psychology? Okay, what should we be saying? I'll let you guys catch up to me. Aaron, the bigger the engulfer, the better, for sure. The bigger the engulfer, the better. Can y'all hear this rain? I'm in my sunroom and it's raining pretty hard. Does nobody know what we say when we get stopped out? Yeah, there you go. There you go. You guys, that's exactly right. You have to say that to yourself. Very good, guys. You have to say that. You because what's going to happen is your psychology is like you're going to want to make that trade work. Okay, you're going to be like, oh, um, maybe it'll come back, and so hope will keep you in that, or greed, or some emotion's going to keep you in that trade. You've got to battle that emotion because man, that's one emotion that I struggle with for sure. And that's you just got to be able to say to yourself, this trade didn't go. I traded my setup. The setup didn't play out. That's not my trade. Okay, so you've got to learn to say that to yourself. You've got to learn to be in that mindset. That's not my trade, and you move on. Okay. Yeah, this is rain, so it's my mic too. Let me just check my settings here. I turn my mic down a little bit. The gain. Tell me if that's not so good or if that's okay. Boom. There we go. You know, tell me if that's better. Testing one, two, three. Testing. How's the mic doing, guys? Yeah, it's really we got I'm in the Midwest of Missouri, and we got a big storm. Tornado type storm coming in, and okay, I turned the gain down uh, in in OBS, and so hopefully that'll fix it. Oh, sorry about that. Yeah, I just had the gain too high. Hopefully this is better. It's a crappy mic. It's a $20 mic. I've got a Yeti. I just didn't grab it. So okay. All right. So now, so basically, then this came down in three waves, and that's pretty interesting. And then you got another engulfer, okay? And so basically, we got another engulfing candle right here. And so this is the one that I saw. So once we got this reversal engulfing candle, we wait for the retest. You always wait for let it center before you enter. Um, that yeah, Tara, that's the only indicator I use is the RSI. Only if I don't use any other indicator but the RSI and price action. Okay. All right. So it comes back down, and now tonight I am going to show you a moving average strategy that some of you already know, and I'm going to spend just a minute on it. But anyway, okay, so this came down. Let it center before you enter. Boom, you're into that trade, and we're up to the upside. Okay, and that would have given you, if you got in somewhere in this ballpark, 14 pips. Okay, again. Now what we do is once that trade goes 5 to 10 pips in your favor, put your stop at break even. If you get stopped out, it's not your trade. Okay. It's not your trade. If you wanna continue to risk the money, you can put the stop down here. The stop's pretty close. It was only how many pips? 8 pips away. So that's a pretty close stop. So if you want to let that thing run a little bit and see if it's going to give you a test of the downside, and then you can do that. You can choose to do that, but basically, what I like to do is put my stop at break even. I basically say if price comes back and goes negative too much, then it's not my trade. Okay. All right. So basically that's the trade. Okay. Engulfing candle retest. That's it. Okay. And then you're in. This one came back, tested your entry, and then boom, it was off to the races. And so this trade actually gave you, if you held on to it, it gave you 25 pips or so. It gave you 25 pips. It came back to retest that entry point again, and then it was really off to the races here, guys. It was really, really off. And so if you held it, you say, hey, I'm going to wait and see if I get any more out of that. If you had held it any longer, I actually called this trade today, and some people took it and some people didn't. But anyway, you know, you could have had, you could have had 50. I probably would have got out right here, 40 to 50 pips. Okay. Um, I actually got out at a different place. I'll show you why. I'm going to talk about why I did that. And anyway, so I want to talk about today's trade. So that's the price action trade that we talked about last week. Okay. Tell me if the rain is bothering you guys. If you're good, as long as you can hear me, we're fine. Okay. All right. Okay. That engulfing candle strategy going for 10 to 30 pips uh, is the primary trade that I use on the Forex. Okay. Now I also use my Elliott wave knowledge on the Forex to see a trade setup coming. Okay. Um, so you take your Elliott wave knowledge and you take um, the price action trade, and you apply it. Okay. And we're going to talk tonight about one more price action trade, but I want to talk mainly first off about using price action and as a strategy for mitigating bad trades. Okay, let me take a peek at Bitcoin here just really quickly. We're kind of moving down. It's looking good so far. Let's see if it comes down to target. So we'll keep the fibs on here and just kind of, oh, there it goes. All right, it's coming down to target. There's first target. It's stopping. Way oversold. I have a feeling though, guys, it's going to be a dumpy dump. Maybe lower. We'll see. See if we blow through these targets, guys. If we blow through them, see we're bouncing right now on the one-to-one extension. We're bouncing on structure right now. There are traders, but man, we're not getting a lot of stoppage here. But okay, so if we blow through these targets, guys, we're bearish. There she goes. Okay, we're right between the 382 and the 50, which is where fourth waves come. Um, a lot of times. So this is what I do, guys. This is part of price action trading as well. So just as far as this is concerned, I have my Elliott wave here. tells me that this was a WXY of some kind. That this is the Y wave. We usually come to the 1-to-1 or the 127, but we've come to the 161. I actually entered short and told the group to enter short today, or at least I'm entering short in case we fall through the floor. Now we're getting the buy back up. People are buying back up from that level. So we're getting a bit of a price rejection here. Okay. So you can kind of see that. So the question becomes, and so if we look at this in the smaller time frame, guys, this is shoot the 1 minute time frame here. It's kind of an engulfing candle. I want to see if this is a real though. That if that's real. But you see, we got the rejection here, right in our target zone, but it came a little deep. Okay, so you can see how we came to the 50% retrace of the third wave. So it came a little deep. Yeah, we're not going to hit 3K tonight, guys. Not going to hit 3K tonight. Well, let's talk about so this morning I got up and I didn't do a lot of analysis and I entered short right in this region right here. I don't recommend it. I just did. I woke up, I saw it. I said, "Oh, this is going to come down even more." So, but it didn't do it. It kind of came back up in three waves, right? So basically, I entered here and then this is what I had to wait through all day long. Okay, which kind of sucks because I generally don't enter on red candles. But I was also like, man, there's a real chance that this thing's going to dump today because it filled the gap. It hit 10 and almost hit 10,000. And so anyway, so I entered short. Now, what right in here? It was a bad position. Okay. And I have Kraken pulled up here in my other computer here, so I can trade this. Now I'm gonna wait for another test of this area. Hopefully we get it. Um, but anyway, so yeah, let's talk about mitigating a bad position. So what I did today is I looked at the wave structure. The first thing I saw that this was a three wave, but I didn't like it because, to be honest with you, it didn't come down very deep. It only came to the 618, which I found very interesting. It was so that's why I thought, man, I thought we at least were going to come down to here or here. So I really thought we were going to come down to structure, but they decided to take it back up. Um, what I then once price went back up and then came back down, I noticed we had a three waves up, three waves down because I measured it and measures kind of correctively. It kind of comes to the 1618, but only wicks it. Okay, and then it comes down, and then we got this three wave move up. And so once we got this candle rejection right here, I kind of knew it was on to the downside for the most part. We had a three wave move there. So my Elliott wave knowledge is saying, okay, stay in this trade. You don't have to freak out because this thing most likely is saying down. Okay, because when you get a three wave down and then a three wave up, we're looking for a three wave down, which is the WXY that I shared in the Telegram group. Now, the only other thing this could be is some kind of a truncated fifth wave, and then this is the beginning of a trend to the downside. Okay, and it's a larger trend. So that's another possibility. Meyer, thank you, man. Thank you, buddy. Good to see you. I'm glad you came by to say hi, man. So anyway, so one of the strategies is you look at look at the wave structure. Okay, you have to understand wave structure, and you have to know what waves. You have to understand what the wave structure is telling you. Is it three waves, five waves, and what are those three waves and five waves? What's the direction telling you? And so um, basically, this was saying direction is going to be down. My trade is okay. So I held the trade with confidence all day long, waited through this stuff. Okay, waited even through this. Okay, um, and then down we came. And I kind of knew it was going to happen. Um, I'm just checking my AU trade there. So anyway, so that's one strategy. What is structure telling you? If structure is saying up, 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 then you might consider cutting the trade if you're in a bad position, or down, 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 the opposite of your direction. But if you say structure is saying, the structure is saying it needs to go down, but maybe it's being a more complex correction, then you can just wait it out. And that's what this turned out to be, a more complex correction. But structure was telling me down. Okay, I believed down. That was my bias. That's what I was sharing today as my trade ideas. Okay, it was down to this region where I have the box. Okay, we've surpassed it. And so that's kind of telling me that we may be more impulsive to the downside than expected here. So putting the fibs on here, you can see how we've come and wicked the 1618. Now price often does that. Um, Price often does that. So Bitcoin breaks the 1618 rule all the time. It's not a rule. It's just a guideline, I should say. Okay. All right. So point number one, I just want to make, when you get in if you find yourself in a negative trade and price is going against you, look at structure, do some analysis, and say, what is structure saying? This was saying W, X, Y to me. So I confidently held the trade to this region. I could have and should have. No, Tara, this is not an entry. No, this is an entry long, but not an entry short. Okay. Um, um, okay. Let's talk about this then. Clear this out. Okay. So, um, dang it. Let me close this. Okay. Second thing, the number one way to deal with a bad position is not to get in one. Okay. Now, most traders do poorly when they are entering into trades. They're reactionary. They don't plan their trades and they just react. Okay, and so basically, if they see price going down, they'll get in a short. If they see price going up, they'll get in a long, and they don't understand the nature of price action. Okay, we as Elliott wave traders understand that if price is going to go up, it's going to go up in waves, right? It's going to go up like this. Okay, so we're not gonna get in up here when price is going up. We're gonna get in when it comes back to us. Okay, that's the way we think about it. Now, so if you want to go long here right now, this is an entry point for long. Okay, if you want a chance and trade to the upside, this is a good. We got a three-wave move. Okay, got some rejection. Okay, it's a good sign of potential reversal here. This is an entry place for a long position. Okay, because we entered long on red candles. If you want to go short, we go short on green candles. So if you were watching price this morning and price was coming up here and it hit the key level up here, filling the CME gap. Okay, it came right to the CME gap and it rejected off. Okay, there, guys, that is your entry short. Okay, that's where you enter short. Now you got the engulfing candle and you got a retest, guys. So this would have been a great entry to the short. Look, you got the engulfing candle, then you got a 50% retest. Here was your entry right here. It's the best entry because we got the engulfer and the retest. Okay, so the best way you can mitigate a bad position is going by entering properly. Okay, dag on it, this thing is wicking big time. And here I'm talking my head off. Hard to talk and trade at the same time. All right, let's watch this thing just for a second. If you don't hit that wick, buddy, you don't get the best entry in the world. You got to hit the wick. I put the fibs on the move. If it comes up here to the 1-to-1 and gives me a rejection, great. If it continues on up here to 97.45, that's going to be impulse. This is how we trade price action. Okay, we understand the fibs, we understand wave action. Okay, and so we basically use our fibs to understand what kind of wave we have. If this is just a corrective wave, a three-wave correction, okay, and it's going to continue down, then we don't want to enter long right here, do we? We don't want to be entering long here if it's going to come down. Okay. All right. Now we're only at the 618. I expect this to come up to the 1-to-1 extension, which would come right below the structure right here, which price often does, and we should get some kind of a bounce there, some kind. Man, they're pumping this thing. It's crazy. Now, if I miss the bottom, I never enter here. Okay, why don't I do that? Okay, so if price is pumping, I don't enter. I wait for a pullback, then I enter. Okay, so I'm waiting for I want to see a nice three-wave pullback that measures correctively, and then we look to enter a trade. Okay, the reason I'm on the 1 minute chart, guys, is because it's allowing me to see the wave structure. I can look at the wave structure and say, okay, I understand what price is doing. Um, Engulfing candles are on the 5 minute chart, 15-minute chart, any time frame really, but I trade small time frames. So um, yeah, Tara, what's your question? Yeah, if yes, but when you asked, price had already broken up here. Okay, so if I miss the bottom, then fine. But yeah, it's definitely an entry point down here. It's hard for me to concentrate when this stuff is happening because I'm teaching. So, but yeah, this was the entry area for sure. So that's fine, Tara. But if you want to be more conservative, you let it bounce and then you let it center. Okay, that's what I'm trying to teach here. Okay, like last night, for instance, you guys got in on the trade last night, right? That $700 trade, we hit it last night in the group. Let me show you. So we hit a $700 trade last night in the group, and this is what we called. Um, Come on, this is right here. Price came down to the 786. We got a bounce. Now look here. Uh, so once we got this, see, I was expecting price to come down to the structure here, right here, to the 127 or the 1-to-1 extension. It only came to the 786 and it bounced hard, really fast. But look what it did overnight. Look what it did. It did that. It came back in three waves. Okay, and that's really confirming. Okay, so when you get this big bounce, and guys, and this is part of price action trading, and so this is a good lesson tonight in just understanding when. price took off, and everybody's like, oh, some people got in here, some people got in here. I mean, how were you feeling when you got this big candle pump and it came down and then pump and you how are you feeling? What happens to your emotions right there? You get really excited. You're like, I'm going to miss out, and so you enter the trade up here, and then look what happens to you once you've entered the trade. Boom, boom, boom. It comes back down. Now, how are you feeling now? You entered up here and price went down on you. How many? Let's see, $100 and some dollars. Okay. So price goes down. How are you feeling if you're trading leverage and if you're trading high leverage and it comes way down on you like that? So, so basically, what you have to understand is you wait for this thing to come back. It's going. Listen, chill, guys. The market always comes back. It always comes back. Generally, it comes back 50 to 61%. Okay, 50 to 61% of the move. So if it moved up here, now this one actually came back almost 100%. It came back to the 83%, almost 90%. Okay, so but this came back in three waves. Look at it. Boom, boom, boom. Once you got this engulfing candle, this is your entry right there. You enter and you don't have to wait through all this crap. You just go right into profit and you're straight up. Okay? All right. So anyway, that was last night's trade. Okay? But I don't get in on these first reactions. I wait for this and then I get in. Okay? So that's what's going on right now, guys. You guys are wanting to FOMO and get in. Now, if you hit the bottom of it, great. But oh no, my battery's running low. Um, Let me get my charging cable, guys. I forgot to plug it in. I usually plug it in. I forgot. Okay. So yeah, a lot of you guys, you're thinking, oh no, it's going up, and so you want to get in up here, and up when price continues going up, you're going to start. So some of you are like, okay, I'm just going to wait, and then price comes up here, and you're like, oh no, and so you get in here, and then price can maybe you don't get in, I'm just going to wait a little longer, and then you get that third push, that price comes up here, and you're like, oh no, and it's going to go against you, and then it does this. Okay, this is where we get in. That's where we get in the trade, guys. Okay, and then we go up. Hey guys, try to learn what I'm teaching you instead of just looking at the price of Bitcoin. Really, there's 50 of you here. I'm glad y'all are here. We are doing a trading night school. This is about learning to trade. So definitely, guys, you should be more interested in understanding price action and how price moves and why it does what it does, rather than just the price of Bitcoin, guys. This is the teacher in me correcting the class. So so make sure that you guys aren't just screaming moon boys and moon and everybody, and we're just on a roller coaster ride, putting our hands up. Just you got to learn to trade in this environment. This is a very volatile environment. It's very risky, and you guys, if you're like most people, you're losing money if you're trying to trade because you get these dumps like this, and so you weren't expecting this because if you don't understand Elliott wave and you don't understand price action, you weren't expecting this dump. My trading group all day long, I had this set up. You know Drawn out for them and told them that this is a possibility of happening and it's high likelihood. I gave them a target area and they had an expectation that this was going to happen. But if you don't understand price action and you don't understand the expectation of these things happening, then what you're going to do is, if you're in a long position or something or whatever, you're freaking out and you're selling down here, right? This is where you ought to be buying down here, not selling down here, but you're freaking out, reactionary trading, and you're selling down here. Then price reacts, and you're like, oh crap, and then you buy up here, and then it comes down again. You're like, oh no, and you sell again, and then it goes up, and then you just get whipsawed. Okay. All right, Jonathan. I'm not gonna do any major TA. I'm teaching price action. This is trading night school. I'm not gonna do any major TA in Bitcoin, buddy. I'm sorry. I'm trying to teach trading, uh, not do, we're just using Bitcoin right now as an example. But really, I should be on the FOREX because I'm teaching FOREX. But since everybody's interested in Bitcoin, we're looking at Bitcoin as well. So okay. All right. So we got price coming up. So what's everybody thinking right now? What's everybody thinking? What's the um, what's the feeling? Oh, it's gonna pump up. It's gonna pump up, and it's gonna go. Yeah, it might pump up, and it might go up to 11,000. I've got a target at 11,500, guys. Um, that's a potential. But how is it gonna get there? How is it gonna get there? It's not gonna. You say, well, it's just gonna go straight up. No, it's not. There are times when you get big candles. They're generally on the third wave. The third wave is when you get the big candles. Okay, and so basically what you're going to get is a reaction off the bottom that's going to roll over and create this H formation. Okay, and then it's going to go up potentially, and so this is where you enter the trade here. Okay, so we're going to let it do its thing. Now here's the beauty of letting it do its thing. Even though price has been the bulls have been eating up every pullback up to this point, okay, even though they have been, there's going to be a time when it's going to dump, it's going to kind of come up, and it's going to roll over and continue down. If you're so accustomed to getting in this trade right here every time and going up, and it's going to come back against you. But if you wait for it to roll over and then give you that reversal candle off there, there's your entry point, okay, and then it goes up, and so that's the better way to do it. Okay, it's the more cautionary. It's the nice job, Frankie. Awesome job, buddy. Well done, sir. Okay, so we can kind of see a red candle fizzling here. Just checking my AU trade. Okay, so what have we learned tonight? We're learning, guys, when we enter a trade, we don't simply enter on the first move. Okay, the first move isn't where we want to enter. Where we want to be entering is we want to let it center before we enter. Okay, so in other words, it's going to move up, and then when it comes back, as long as it comes back to the middle, 50% to 61%, that's where we're entering the trade. Then our stop loss is just at the low, and it's very short, very small. Okay, you enter the trade up here. Look, you got a lot of stop here. You wait for it to pull back and center, which it will. Then your stop is very short. Okay, and that's what we want to do is mitigate the risk, minimize the risk. What's up, Gary? How's it going, buddy? All right. Porky Pig, I see you get the FOMO real bad at times as well. Well, listen, join the Telegram group if you haven't joined because I'm good at helping people learn not to FOMO. I mean, that's one of my specialties. So, anyway, hold on 1 second, please. Here you go, buddy. I got a cup. Thank you. All right. So there we go. Let's talk about a simple price action trading lesson that you can do here using the 1 hour chart. Okay. And the moving averages. This is just a simple price action trade that I'm going to teach very quickly. I've got no, come around, son. I've got other videos on this, so I'm only going to spend a second talking about it. But I just wanted to offer it. Thank you, buddy. Appreciate it. I just wanted to offer it to you as a potential price action trade. Okay, that you can use in the Forex. You can also use in Bitcoin. Okay, so basically you can use this a couple of ways. Now, first off, let me go to the settings here. I'm going to turn off. I'm going to turn off the 100 and the 200 just noisy, and I'm going to keep my yellow, which is my 20. That's my fast moving average, and then I got a 50, which is the slower moving average. Okay, and then the ultimate fast. You want to treat the price line, guys. Um, good evening, Crypto Fever. Guys, everybody joining us. This is Trading Night School. I'm teaching to trade. I'm not doing Bitcoin TA, okay? Though this is the Bitcoin chart. All right. Anyway, that being said, so put the 20, this just the regular simple moving average. Okay, put the 20 and the 50 on there. Okay, you do whatever color you want. I like the yellow and the red. Personally, that's the way I like it. Now, what you're gonna do is basically a couple things. You're gonna let the 20 period moving average cross the red moving average. Okay, that's the signal. Okay, so basically what you're going to do when there's a bullish cross, it's just a moving average crossover, is all it is. When the 20 crosses the 50, okay, you don't enter there. You wait for the next pullback to come back and touch one of the two lines. Okay, so basically you wait for the cross, you wait for the retest, enter long. Boom. Why don't we enter at the cross? Because the cross happened up here when price was at the top of this candle. And so if you're entering at the top of that candle, you're going to have to wait through that pullback. So wait for the pullback anyway. So moving average cross, wait for the pullback, enter long, and you don't get out until price crosses the 50 or the 20, just whichever one you want. Okay, so as soon as price crosses and closes an hourly candle on the 20, so basically this trade you would have gotten in somewhere around 8,700 and gotten out, um, you know, at 94. So there's a $700 trade with those criteria. Now, if you want to be more aggressive, okay, you want to be more aggressive, what you can do, again, this is the hourly chart with the 20 and the 50, okay? Instead of using the 20 crossing the 50, you're going to use the price, which is we're going to pretend like price is one of the moving average lines, okay? When price crosses the 20, okay? When price crosses the 20, all right? And then retests it, okay? It crosses and retests it. Um, and it's got to be across and stay across on the hourly chart. So just wait for the hourly cross, okay? Then wait for a retest of that cross, and then you're in the trade, okay? And that puts you in the trade back here at about the same price here, to be honest with you, the way this price action worked. But again, that puts you in the trade as high as you want to take it, okay? Then you can take your profit whenever. So that's a simple strategy you can do. Now we're not going to get back in the trade again, and now if you did it once price crossed this moving average, what you'd want to do is wait for a retest if you get it, and then and you probably will, okay, and then you wait for that retest and then you go short, okay. We don't go short down here, okay. Why? Because generally speaking, what's going to happen? You're going to get a three-way pullback. If it's going to continue down, you get a three-way pullback and down you go. So wait for this. Okay, this is what I want to teach you about price action. Let it center before you enter. Okay. All right. So that's basically your entry is always on pullback. So some of you guys aren't patient enough, and so you need to learn patience on your entries. I'm still struggling with patience on my entries, and I still have bad entries like today's, and I want to talk about it in just a minute. Okay. And so, and I didn't even handle it the way I should have handled it. And so I want to teach you how I should have handled it, and maybe you can learn from my mistakes. If you're listening and you're learning and you're liking what you're hearing, let me know in the chat right now, if you would, please. Just give me some feedback so I know you guys are tracking with me. There's 50 of you watching. Well done. Well done. Are you guys beginning to understand the importance of letting it center before you enter, waiting for the pullback, being patient for it? Wait for it on the larger time frame, 15 minute. When I say larger time frame, larger than 5 minutes, okay? Because I trade the 5 minute chart a lot. So um, this is really, really big, important stuff I'm teaching you guys. Some of you guys are killing yourselves because you're not waiting. Awesome. So what's happening, and this is how They play with your emotions, guys. Okay, price comes down really fast, you enter the trade. It goes against you, you freak out and get out of the trade. It goes down again, you're like, oh no, I was right. You get back in the trade. It comes back against you. Oh no, I'm out. I got it's going against me. I'm out of the trade. And they just whipsaw you back and forth. And that's what price does. Okay, price action does that over and over and over again all the time, and that is why you guys freak out. Okay, so you need to wait for the right time. Um, Nice, nice. Anyway, so that's why you guys are freaking out because you believe that every time you get these big candles, you're going to get some big up move like this. It's just not the case. It's not the case. You get these up moves, yes, okay, but they come at certain times, and you gotta know when they're coming. All right. So is this gonna go up or is this gonna go down? We'll have to wait and see. Are you gonna freak out if it goes up? I mean, is it gonna go straight up and up and up? Well, if it does, guys, guess what? It's not your trade because it doesn't fit. Um, it's just moving averages, Tara. Just simple moving average. The 20 and the 50. This particular one is oh, I don't remember favorites. Multiple moving averages using only one indicator. I mean, it's a long name, but that's what this one is. Multiple moving average uses using only one indicator. Okay. All right. So if price ends up shooting to the moon and we miss that trade, guess what? It's not our trade. If it doesn't come back for us, it's not our trade. We miss it, and that's okay. I'm not going to chase a trade because just as soon as you chase that trade, buddy, you are lost. Wait for a 50% retrace. Okay, let's now spend the rest of our time talking about mitigating a bad entry. Okay, I want to give 5 strategies for mitigating a bad entry. When you find yourself in a negative position, okay, and you're freaking out and you need to manage a bad trade. Okay, this is going to be golden information for you. Okay, golden information. All right, let me tell you about today's trade. I even videoed it. Okay, I even videoed it on our in our group. Let me pull that video up, and I'll show you what I did. I was a very small trade, okay, but I showed it because I was. So here's a take profit. Here's a video that I had. There's no audio here. It just takes a minute. So here's my entry right here. It was a bad entry, but here was my entry. Here's my take profit at 16 pips because that's where the fibs. I put my take profit just underneath the one-to-one extension, okay? And that's what I was expecting. I was expecting a three wave, and a three wave to the one-to-one, and then a continuation to the downside. So what I did is we waited for that. Let's see, this is about a minute and a half long. We waited for price. Price is doing nothing right now. There it goes. Take profit, boom, position closed. Now I let it do its thing for a minute. I let it go up. I pulled up the RSI. I said, you know what? Um, saw a little bit of a tendency to hesitate here, and look what I did. It was a bad entry. But I don't mind selling on big green candles like this, okay? And so when I saw it start to fizzle, okay, I went short right here, and that was not a good thing that I did. Now it could have reversed, and I was expecting it to, and I was actually overconfident in my account, and I was expecting it to come down. Okay, so I entered short there, and this is basically it started going my way. I think I got like 2 or 3 pips into profit. I don't show that in the video, and it was looking good. And I went and did some work, and then basically, um, yeah, here's where I entered. Actually, I entered right here. Um, I entered that short. You can't really see it on the 5 minute. See it on the 2 minute. There we go. I entered the short right up here. Come on. right there. Okay, my position is a little higher than where I entered because I added to my short. I'll talk about that in just a minute. I didn't add much, but I added. Okay. All right. So anyway, basically it went against me, and guess what I did? I didn't have the psychology to say that's not my trade. Okay. In fact, I was upset. I was frustrated. It went $20 against me. I was like, oh man. I was just thinking, okay, maybe it's just going up to the 127 extension, and then it'll come down. And so it went up to the 127 extension, bounced around up here, and I thought it was going to come down, and it didn't come down. In fact, what it did was it came down right here. Actually, it went up. Actually, it continued up to the 1618 extension, and came down a little bit, and went sideways all day. Came down some, and then it shot up again. And I'm like, daggone it. And by here, I stayed in the trade that whole time. Up here, I was $80, 80, $85, almost $90 in the negative. Okay, for this small size trade, and I didn't like it, and I was in a bad position. But why did I hold it, and why did I stay in it? Okay, all right. So let's talk about it. The very first thing I want to say to you is that if you want to mitigate a bad trade, don't get in a bad trade. Okay, don't do what I did today. Don't be a hero and try to nail the top. Okay, it's not that important to nail the top. It's only a couple of pips, because when price is coming up, okay, guys, and then it reverses, and you're trying to get the very top, that's fine. It reverses, but you know what happens? It comes back, and it usually comes back almost to the top again. So really, how many pips are you really saving? Why don't you just wait for confirmation that there's a reversal? Wait for the retest, then enter the trade, and then you'll be fine. You don't have to worry about bad entries anymore. Okay, so I was cute today, in that I just decided that I knew what the market was going to do, and I just decided because I knew what the market was going to do, I went ahead and traded it with confidence, and so. And I got myself in a bad position. My pride or my psychology didn't say this wasn't my trade. I wasn't happy, so I stayed in it and let hope uh, keep me in the trade. And then it got really negative, and then I really couldn't let it go because I couldn't take that kind of a loss. I was $50 or $60, and then it came back almost to my entry here. I was probably like negative 20 right here, something like that, 28. I could have taken, I could have cut that, mitigated the small loss there, but I didn't. I held it. I held it. I held it. 85, $90. My psychology wasn't doing great, but I was actually pretty confident that this thing was coming down, and I'm pretty confident it's going to continue coming down. But I'm not certain of that. But I'm pretty confident of that. So anyway, so the very first thing is you don't enter stupidly like I did today. Don't enter your trades with pride and arrogance or stupidity. Okay, let the market reverse on you, and then let it come back 50% and show continuation to the way you want to trade. Because sometimes, basically, what the market will do, it'll start reversing. It looked like it was reversing, and then it continues on. Okay, and that's what this one did. So the very first thing is be disciplined with your entries, not to get yourself in a bad position in the first place. Okay, that's the best advice I can give you. Be disciplined with your entries. Have a rule set. Okay, you need to have a set of rules. A criteria for invalidation of your trade. You need to know where your trade is invalidated. Okay, so the simple trade that I've shared with you is engulfing candle retest. Where is it that, and then the continuation, and then we enter down here, and then it goes on. Right, that's the trade. Well, where's the invalidation of that trade? This trade every time is a break of this low. Okay, so wherever there's the reversal in engulfing candle beginning, the below that engulfing candle is the invalidation point of that trade every time. Every time. Okay, that trade's criteria is engulfing candle, retest, continuation. That's what you got to see. If you get engulfing candle and it breaks that engulfing candle, trade is over. What if if it just breaks it a little bit, trade is should be over. Okay, why is that? because that's the trade idea. Because we're not looking, we're not hoping it's going to go our direction. We get engulfing, we get retest, we get continuation. That's what we want. This was your entry point for that trade, and you could have had it. Okay, why? Why? Because you got an engulfing, you got a retest, okay, and then you got an even larger retest here, and then a continuation. Okay, so that's the first rule. Discipline yourself not to get into a bad trade. That's the very first thing. Um, uh, that's the very first thing you do. Aaron, when I say stop it out, all of my stops are manual. I do all of my stops manually. I don't do any stops with auto exchange stops. Okay, just so you understand. Check in on Bitcoin here. We're still showing signs of reversal. Okay, so now I'm going to put my fibs here. Okay, now this would have been, you got a little three-way pullback here. This is not a bad entry point right here if you were watching it. Once you got this, once you got this engulfing candle right here, you already got kind of a. Let me see if I can make it bigger. You already got kind of a retest candle right here that came to 50%. If you wanted to enter this trade, you got your criteria is like this. You got you got the three wave pullback, you got an engulfer, okay? Then you got a retest of that engulfer right there. There's your entry point right there, and you could ride it to the upside, okay? We're not that far off of it, we're only we're 50 bucks off of it, but still, when you enter up here, you put yourself in danger, okay? Um, but anyway, just that's an example of price action trading, guys, where you trade Bitcoin and just nail your entries. But you got to wait. See that three wave pullback? You see it? And if we put the fibs on it, I'm going to go to the 1 minute chart. This is the 1 minute. You can really see the detail of the waves. That's why I do it. Okay, if I put the fibs on that, look where it came. We got a three wave move, and where did it come to? Came to the 1-to-1 or the 1-2 set, came to the 1-2-7, and then we got continuation. Okay, so basically, once we got the continuation, we got a little pullback right there. There's your 50% that sent. So in other words, we got a continuation, we got a retest of that continuation. There's your entry point, and you're off to the races. Okay, we did get an engulfing candle. If it comes back 50%, it gives it to you. There's your entry point, and you're off to the races. Okay. Aaron, that's right. Wait for the close of the candle. That's really, really good. That's good advice. Good advice. All right, so this is pumping, guys, and this is pumping. And so, how are you feeling? You feeling like you're missing out right now? Are you feeling like you're missing out? So, what do you do? What do you do with this? Well, we know it's going to pump up, right? We know. This could just be a three wave move, guys. All it is. So, 1-to-1 extensions right up here. It's 97.70. It's pretty high. But we could get that. This could be the fifth wave too, as well. So the 618. If you get a bounce off the 618 and then it comes down, okay, like this, that's a five wave move, three wave pullback. There's your entry point, off to the races. Okay. Most likely this is some kind of a fourth wave, or that's a B wave, one of the two. But don't FOMO, don't freak out. Don't FOMO. Wait for the pullback. That's exactly right. Wait for it. Just be patient for it. It'll come. And guys, what if the pullback doesn't come? What do you say? Raul, it's not confirmed yet, brother. It is not confirmed whether we're going up. We've definitely got to bounce off of a key fib level, but it could be a corrective bounce, and that's all we're getting. But what do we say, guys? What do we say if it goes up without us and it doesn't pull back? We don't get the pullback. What do we say? I'm gonna train you. I'm gonna beat this into y'all's head. What do we say? We're waiting for the pullback. We don't get the pullback. That's right, Julman. I don't know how to say your name, man. I'm just going to call it Yuleman. I like to say it that way, Yuleman. That's right, guys. Keep saying it. Keep saying it. It's the way you're going to deal with your emotions. It's not my trade. It is not my trade. It's a form of it's a form of discipline, but it's also a form of cognitive dissonance. Cognitive dissonance is when a kid says, "Oh, that's my favorite toy," and then they break their favorite toy. Oh, I didn't like that toy anyway. Okay, so in other words, it's a way of dealing emotionally with a loss, right? Um, okay. Um, Okay, number one, be disciplined, have rules, criteria, and invalidation for your trade. As soon as it's invalidated, break that trade. Keep yourself out of bad trades. That is the best way to deal with bad trades. Okay, number two. Number two, um, this is big, really, really big. There you go, Frankie. That'll work. Not for me. You can have it. That's right. That trade's not my trade. Okay, good job, guys. Good job. All right, number two point tonight: when how to cut a bad trade. Okay, so guys, I want you to say something else with me. Okay, I want you to learn to chill because the market always comes back. The market always comes back. Type that in there. Okay, type that in there. Chill. The market always comes back. It always does. Always. I want you to learn that. Sometimes what guys will do when they get into a bad situation is they will just cut the trade because it's too stressful for them to handle. Okay? Now for me, I got in this trade thinking it's going to come down from here, but it didn't. What are you doing? I'm going to put you on camera. Just walk past. You're fine. Yep, my wife is crawling under the camera, guys. Crawling under the camera. She didn't want to be on. Okay, so back to what I was saying. Um, what was I saying? Okay. So I got in right here, right at the top of that wick, baby. It was awesome. It was perfect. And then it came down. It was looking good, and then it came back on me. I was like, hey, okay, and I was expecting that, right? But I didn't get that. It continued on, and I let myself get in a bad trade. Okay, and so what you have to realize is that the market comes back, and so what you want to do if you don't cut the trade properly, instead of cutting it, listen, what I could have done is I could have cut it way up here, for a big loss. Okay, so that would have been how many pips if I cut it up here, because that's when my psychology was like too big, 15 pips. So that 45, 50 bucks, 60 bucks, something like that. Um, so you know when your psychology kind of wears down and you start getting stressed out about a bad trade. So that was 60 bucks to the negative. You're like, I don't want to lose that trade. And so, or you don't want to lose any more, so you cut the trade. Well, what you have to realize is nothing goes straight up forever. It will correct. It'll do small corrections as it's going up. And once it's done about three little pushes like this, it'll do a larger correction like that. Okay? Wait for that correction. Okay? Wait for it. So, my entry today, when I could have and should have gotten out, was right here. It would have still been a loss, but it wouldn't have been as big of a loss. If my psychology was of such that I wanted to get out up here, I just waited. I said, okay, just wait it out because you're going to get a pullback. Oh, come on. So that's point number two is if you get in a bad trade and it's starting to get uncomfortable, realize that probably by the time you get really uncomfortable to where you're just like, oh, I got to cut this trade, you're probably the market is probably about finished and it's about ready to correct. Just wait a little longer. Wait a little longer or wait for the end of the trading day when the correction starts to happen because it will come back. It will retrace. So this is a twofold thing. Wait for a three-wave retrace, okay? And then exit the trade. You're just still a loser, right? But you're not losing as much. In other words, you're losing less. You're making yourself. And so if only do that if you don't cut the trade where you should have cut it. Where should I have cut it? As soon as it broke this high, I should have cut the trade, right? I would have lost like $10 or $5, something like that. Some cheap, nothing, no big deal kind of amount. But instead, I let it go, I let it go, I let it go. Okay. And when I was like, oh crap, it's going to keep going, I was like, no, it's not because the market always comes back. Okay. So, uh, so basically, wait for a three-wave retrace, and then get out of it. Okay. Now here's what's going to happen in your psychology. You're going to see it coming back. Okay. You're going to see it coming back, and you're like, oh, it's coming back. And you're going to be like, oh, it's going to keep on going, and then you're going to make profit, and you're going to win that trade, okay? But you're not. Here's what you have to understand. This is really, really, really important. So listen up. Listen up. And I've left this bad trade going on purpose, slightly, for this. Um, so whatever negative there is, if I think it's going to continue to be a negative, y'all are all going to have to super chat me $1 so I can pay for that negative because I'm not trading. I'm not thinking about my trade so much as I'm teaching you guys through it. All right, the second piece. So number two, number one, don't get in a bad trade. Be disciplined. Have rules. Have criteria. Discipline yourself. Know where the cutoff is, and cut the trade. Okay. Number two, instead of cutting the trade for a big loss, wait for a three-wave pullback and then cut the trade. In other words, you're going to get it. The market won't go straight up, straight up, straight up forever. Even you may feel like it is, but it won't. It doesn't do straight parabolic things forever. What it does is it'll go up and then it'll come back. Wait for it to retrace, and then you can at least minimize the loss. You can have less of a loss. That's point number two tonight. Managing a bad trade. So instead of taking a really big hit, take a smaller hit once. Wait for the retrace. Okay. Now what you need to do when you get the retrace is you need to put the fibs on it. Okay. So once this thing made this wave right here. Right, once it did this and started coming down, I put the fibs on it, okay, and I said, okay, and this came down and it wicked to the 1618, which it does that a lot in the forex, but it wicked the 1618, but it didn't go past it, so I said and so that would have been a good place to, but I was working and I wouldn't do that, but that would have been a good place to to get out of the trade, okay, so that was one area I could have gotten out of the trade. It came back down here, I could have gotten out of the trade here as well. But again, you would need to put the fibs on this move to know whether it's impulsive or corrective. If it's an impulse, then stay in it. If it's a corrective, this is the 127. It bounced on the 127. That's a corrective wave. That told me we were going up more, right? Um, this is trading night school. This isn't about any other technical analysis, guys. So keep the chat about trading night school, okay? Um, so yeah, so basically, you got to pay attention to the structure, which I told you, but also, wait for that retrace. Once you got that three wave, this would have been the place to exit. Again, that I could have exited that for a smaller loss. How many pips would I have lost had I exited down here? Would have lost about 4 pips, which isn't a bad stop. Okay, that would have been a $12 loss, no big deal. Okay, now I knew that this was going to happen. Actually, I saw it coming, and I saw the move, but I was like, it's okay. I'll just wait it out because I knew after that happened, it was going to be coming down. I knew because of structure. So really, guys, you got to become experts at structure and Elliott wave and understand what's going on. Now, I'm not perfect in everything I know, but I or everything I believe, but I just had a pretty good insight into this particular wave. Okay, let's see. Yeah, the 5 minute is okay, but the 15 minute to an hour is better. Yeah, the 15 minute is probably the best to be trading on Bitcoin. Um, we're getting some rejection here, guys. So this on Bitcoin could be a 5 wave move right here. So you got 1, 2, 3, 4, 5 right there, and now we're getting the beginnings of a 3 wave move, but we're looking for a 3 wave. Okay, looking for a 3 wave, not a 1 wave. So this looks like it's one. We're looking for 2, 3. There's your entry point if we're going long. But if it makes a new low, guys, that trade is invalidated. Yeah, you have to use Raul. You have to know how to use the trend-based fib extension. Okay, so when this does this, you need to be able to put the trend-based fib extension tool on that guy, like this. You want to see it come to the 1-to-1 or the 127 extension. That's general, or just barely wick the 1618, and then reverse. Once you get that reversal, you got confidence to enter. 5 minutes is a good chart for the smaller the time frame, and you still get engulfers like a big engulfer. Then uh, the more valid that is. And to me, the smaller time frame engulfers are better than the larger time frame engulfers. But the larger time frame engulfers are good too. It's just you have to wait longer for sure. You can get in the trade quicker on the smaller time frames. All right, now let me show you another strategy. Um, a lot of times now, okay, so here I am. I'm looking at this wave and I'm thinking, okay, this is going against me. How high is this going to go? So I'm gonna put my fibs on this guy right here. Okay, I put my fibs on there, and if this comes past the 1-to-1 extension, guys, I'm that's going to be impulsive. But if it comes to the 1-to-1 and then continues down, that's going to be a sorry, tag on it, just a 3 wave move, and then down we go. Okay. All right, now if I don't want to wade through all that stuff, I can just cut the trade, and that's another thing you can do is if you know it's going up, if you're certain it's going up, cut the trade and make sure that you enter short again. It's because if you miss the short, you don't recoup your loss. Okay, so what we're trying to do is manage a loss so we don't lose as much. Okay, so if I cut the trade right here, I would wait for the 1-to-1 extension. Um, you know, wait for the 1-to-1 extension and make sure I enter that trade short. Okay. I wouldn't want to trade this long right now because this is no entry place for a long. Okay, no entry place. Okay. Yeah, Seth, man, glad to do it, brother. Glad to do it. Good to see you. I haven't seen you in a long time, buddy. Okay. Now let's continue talking about mitigating a bad entry. Okay. Number three. Here's something really interesting. Let me show you my bad entry today. Well, it wasn't so bad, but it turned out to be bad, and I didn't cut the trade. So I actually traded this to the long side, but I had kind of a let's see. I'm trying to think of. I was on the 5 minute chart. Yes, 5 minute chart. Here's what I saw. I entered. I entered right here. I entered right there. Okay. Now, why did I enter there? Well, here's what I saw. Engulfing, retest. Engulfing, retest. Another engulfer. It retested. I expected this to be the big wave going to the upside. I expected that, but I didn't get that. In fact, what happened? Oh, you know what? Actually, I entered right here on that engulfer. So I had this engulfer retest, engulfer retest, and then I had another engulfer, and it came down. I was like, so I entered expecting it to go long, and what it did immediately, it came against me. Now, here's a rule that you need to follow. Listen up big time to this rule. Really, really important. Really, really important. If you have a trade, so let me see if I can show you the criteria. I'm going to replay this. Okay, there it is. Best spread pairs, EU, AU. Okay, but EU is the most choppy. A lot of manipulation in EU. I like AU. I trade EU and AU the most. Okay, so watch this carefully. Very, very, very important. Now, I'm going to go real slow. All right. Okay. So there was an engulfer. Okay. Um, yeah, there it is. And then I got the second green candle. I think I got in right in here somewhere because when it was being made, I know what happened. I know what I did. Let me do it again. Right there. There was my setup. So that looks like it's going up, doesn't it? Once I got that engulfer candle, I was like, I need to get in that trade, and I wanted to get in it, so I got in it. Now, so I got in right here. I think the red when the red candle got down here, I got in before it closed. Well, what ended up happening is that the price came down on me. Where should I have cut this trade? Where should I have cut this trade? I should have cut it as soon as it broke this candle right here. Okay? I should have cut it immediately once it broke that candle, cut the trade. That's not my trade. Why? Because my strategy is this trade setup is engulfer candle retest. Okay? This trade strategy is that engulfer candle retest. But if it breaks the low of that engulfing candle, then it's not my trade. That's the rule, but I didn't follow the rule. I let my patience often gets me into trouble sometimes, and so I've grown to be very, very patient. But I sometimes let my non willingness to take a loss of any kind allow me to stay in a trade. And so I stayed in that trade because I know the market always comes back. Now let me show you what it did. You really pay attention to this. Okay, what happened here is I got in right here. The market did this, but look what it did. It came. So my entry was like right here on this price line. Price came back up to my entry and went on beyond it. You're thinking, what's your psychology? Um, what's your psychology once price goes beyond? You're in profit a little bit. What are you thinking? Oh, well, it's going my way. I'm okay. I'm going to stay in the trade. Okay, that's what you're normally thinking. But here's what you have to do when your entry criteria. What you should do is when your entry criteria is broken. Okay, in other words, when this candle got broken to the downside, I should have cut the trade. Instead, I waited for it. It came back. When should I have cut the trade? I should have cut the trade up here when I was a dollar or two in profit. But it's hard to cut the trade when you're a dollar or two in profits. It's hard to cut that trade when you're a dollar or two in profit. Why? Because you're like, oh, it's going to continue on. But here's the thing: this isn't your trade because the price action that you're getting is actually not part of your trade setup. And so you're getting price action that's different than your trade setup, because the engulfing candle retest is a continuation, and it should get a pretty big move pretty quickly. If it breaks that low, then that's not the setup. Okay? Now, so basically, once we got this right here, I should have exited the trade. Now, here's the cool thing that would have given me. That would have given me opportunity to see this engulfer set up and this retest and enter down here, and I would have had a much better entry for what this brought us. Okay, and so what it will often do is give you a better entry if you get out of the trade and get back in. Realize that you can get back in the trade. Okay, and that's hard to do sometimes psychologically. But here's the rule: if price goes against you and breaks the validation of the trade, if price breaks the validation of the trade and you don't cut the trade, okay, listen to this carefully, guys. Really big deal. If price goes against you and breaks the validation of the trade, if it invalidates the trade and you don't cut the trade at the invalidation point, if you wait it out and price comes back to your entry point, and it often will, cut the trade. Cut it. I can't tell you how many times the market will give you a chance to cut the trade. It will give you a chance. See, I had a chance to cut this trade. So I entered here. It went against me. It came back up. I should have cut the trade here because this is what it did. But I didn't do that because I was wanting it to do that, right? Right. Well, if I should have cut the trade and waited, it wasn't my trade. Had I cut the trade, I would have had a better entry down here or right here. I would have had an extra 15 pips or something like that, 10 pips or something like that. Uh, better position, but didn't have a good position. So anyway, I waited it out because my TA was telling me something very clearly. My TA was I waited out. I was like, I'm in a good trade. I got a three wave there, and then I got a three wave there, and then we got the reversal. So once we got the reversal, I was like, okay, we're good. It's gonna go up, and I waited for it to go up. And once it went up, guys, that's when you saw the video. That's when I took my profit where I did, and then I got into this bad trade right here. So I'm in a habit of getting into some bad trades. So because I'm not always as disciplined as I need to be as a trader. When I'm disciplined, I don't get into trouble, and I don't have to mitigate a bad trade. So anyway, so now uh, I entered this bad trade. I've waited for it. Now, what should I have done? I should have gotten out right here because it broke my rule. It broke my validation. It didn't come down like I thought it was going to. Okay, and so it came down here back to my entry. I had a chance to exit and profit with no loss at all in the trade, and I didn't get out, and now I'm $11 back. Okay, and now the question is, can I get out now? Am I going to get out now? No, I think it's coming down, but and I'm willing to risk it for the down move. Okay, or I can cut the trade right now for a loss, and but if you do, you just got to make sure you hit that. You got to get back in order so that you get your money back. Otherwise, if you just get out and walk away, then you've lost the money. Okay. All right. So yes, it was Aaron, but I was working and didn't pay attention to it much. And once it went past me, I was just like, oh crap. Uh, my entry was over here, by the way. Oh, you're talking about the one down here? Yeah, that red engulfer was a signal to get out. Yes. Yeah, I had that signal to get out, no doubt. But I didn't. I waited because I don't like to take negatives. And that's my psychology sometimes. Don't like to have a negative. But what happens is because you don't want to take a loss, um, you don't want to take a loss, then um, you you end up taking bigger losses. And that's what happens. So be disciplined, not to get into a bad trade. Secondly, um, wait for the retrace, and you can minimize the loss. Okay. thirdly, if the this is a big one, if your trade gets invalidated, guys, if your trade gets invalidated, it goes against you, and you wait it out. If price comes back to you, and it often will, it'll come like right back to your price or just below it, and you'll be just a little negative. Cut the trade. And one of the rules is if it comes back 50% back to you after its first move away from you. So if it moves away from you first and then it comes back 50%, you know, you 50% to your entry point, cut that trade, get out of that trade because you're in a bad position. It's better to be even if price goes your way, you are in a bad position. You're not in a good position for what the market wants to do to you, and the market's going to screw with you. Okay, let me explain. If you get in the trade right here, okay, for instance, you got an engulfer right here and then a retrace, and you get in right here. Okay, when price comes up and then starts coming back, when are you going to get worried psychologically? Well, when it starts going negative, right? As long as it doesn't go negative, I'm okay, right? Well, this trade really negative never goes negative on you. So when you get in properly, you don't have the psychological problems. All right, but let's just say you don't get in properly, you get in right up here. Price goes against you, and you're like, oh no. And then all of a sudden you get this big shot up, and you're like, yes, yes. And it starts going for you, and then all of a sudden it starts coming back, and now it's at your entry point and your break even. You're like, well, that's okay. It's just a pullback. It's going to keep on going. But it doesn't. It continues down, and now it's back down here again to where it already was. You're like, oh no, it's going to keep on going down. And your psychology is bad because your entry is bad. When you get in a bad position, because you entered poorly, you're going to succumb to these moves. You're going to have to wait it out, or you're going to lose big. You're going to lose your shirt. So, in other words, when you get in the trade properly, you're not you don't have to deal with what the market does to you psychologically. You can really wait through all that crap, and you're like, that's no big deal. But if you're in the middle of it and it goes up and down and up, and you're in profit and out of profit, in a profit and out of profit, it's really frustrating to you. It's really, really frustrating. And so understand that. So that's why we have disciplined entries. Okay. So if it goes against you and it comes back, cut that trade, get out, and get in a better position. Wait for the market to show you a better position to be in. So that means maybe another engulfer or the bottom of a wave, something like that. Okay? All right. Here's the last thing I want to share with you. This is if you get into a bad trade and it's really bad. I mean, it's like really bad. And it's so far gone and you're like, "Oh no, what do I do?" Listen, the market wait one day and the market generally comes back to where it was the day before because 90% of the time, guys, the forex is not trending, it's in correction mode, okay? So here's what the market will do. One day it'll trend up and the next day it'll trend down. So, for instance, let's just say you enter short right here. You're short right here. You want to go down, but the market goes up against you and you don't cut the trade. And you're like, oh no. And it gets up here at the end of the day. And you're like, you're so far gone. Just wait till tomorrow because tomorrow, look what it did. It came back to you. You can get out. So that's like trading it down and you get your trade back. Okay. So this is the last thing. Sometimes if you get bad and the trade is like so far gone, as long as you have the margin to cover it and you're not in margin trouble and because you don't overtrade your account, wait till tomorrow. Just wait till tomorrow or even the next day because most of the time the market is not trending. The market is in correction mode, sideways. Okay? And so it'll go up and go down and go up and go down and go up and go down. And that's what it's doing. So, um, one other thing you can do, as long as you're not over trading and you if you have the money in your account to do it, is you can add to your position at the top of the wave, which is what I did today. I didn't add a lot. I added $5,000, but I added at the top. About when I was negative about $80, I added a little bit to my position. And what it did is it created, it gave me a positive trade as that thing came down. Positive portion. It averaged my cost up a little bit, so it didn't have to come as far back. So anyway, that's something important to think about as well. You could add to your position as long as you understand the Elliott wave and you know the direction of the trade. Okay. All right, guys. That is trading night school for tonight, guys. 2 hours. Wow, that shouldn't have gone that long, but that's how you manage bad trades. Without cutting them into major big losses. That's how I do it. And again, you got to have good psychology. You got to have good psychology to do that kind of stuff. Uh-oh, is my stream? Okay, my stream kind of is choppy. Sorry about that, guys. There we go. Hopefully, we're back in business, guys. Just looking at this AU trade here, guys. This is an impulse to the downside. So structure is telling me down one, two, three, four, five, most likely. Um, okay. Then we had a three-wave pullback. Okay. And then we had this five-wave move there. Now we're getting a pullback. This looks like a 1-2-1-2 to me, and it's going to continue down most likely. So um, that is why I'm holding this particular trade. Okay. All right. Let's try to. Any questions for tonight, guys? Any questions for me about mitigating a bad trade? Um, Shared a lot of information tonight, but this applies on all markets, but it's just dealing with the psychology of trading because psychology is the most important part of trading for sure. This looks like it's coming down. Just looking at it, but it might not be. Yeah. I hope you guys enjoyed the live stream tonight and the information you got. I'm just going to hang in here one more minute or so just to kind of let you guys catch up and see if there's any questions you might have for me or thoughts you want to share. Indeed, indeed, Denny. Wait for clarity. This wave going up on Bitcoin, we haven't traded a lot of it because there was no clarity to me to the wave. The real clarity came last night and tonight. So anyway, I hope this just helps tighten up your trading a little bit and helps you guys become a little bit more confident and more disciplined. You need to be disciplined in your trading. That's really really critical. If you can't be disciplined, you're going to lose your money. Okay, so you're going to lose your money. Everything I said tonight applies to cryptocurrency trading. Same thing. I'll do a little Bitcoin TA here to finish this out. Right now, it's not an impulse confirmed yet. I mean, this is impulsive, but it's part of a C wave of an ABC. We got an A wave, a B wave, and a C wave. So it's three waves. And we came down and we wicked. Actually, we wicked through the 1618 pretty heavily. So this is like a fourth wave. Should be getting a fifth wave to the downside. If that's the case, guys, if we get a fifth wave, now the fifth wave could very likely be hidden in here. Okay, so that's often where they hide the fifth wave. It looks like the wave doesn't finish. Oh yes, it applies to stocks as well. Oh, good deal, Tactical. Good deal. Yeah, Mark, definitely rewatch this one, buddy. Awesome, Crypto Fever. Awesome. Um, so anyway, yeah, the fifth wave could be hidden here, um, but it might not be. So if we get a fifth wave, if we get another wave to the downside, guys, um, that's going to put us down here at the 1618 most likely. And if that's the case, I don't know. It's still likely it's likely impulsive, guys. One, two, three, four, five. Three wave pullback, retest the top, then big wave down after that. But right now it's looking corrective with more upside to come, most likely, but I can't be certain. What I shared tonight is it works for any market, trading any market. It's not just the Forex. It's just how to manage a bad trade. And we get in them because we're not disciplined. The main thing tonight to remember about your bad trades is you get in bad trades yourself. You let yourself get into a bad trade because you don't know what you're doing. You don't wait for the pullbacks. You just jump in anywhere, and you don't manage your emotions. You don't manage your FOMO. So that's the biggest reason why you're. And if you need help, you know, knowing when good entry points are, knowing, in my group, people ask me, is this a good place to enter? And then half the time I'm saying, no, it's not a good place. No, it's not a good place. And we watch the market go without us sometimes because it wasn't a good place to enter, but I'm disciplined enough to know what good entries are and what aren't good entries. And I just like, listen, if it goes off, it goes off, but I'm only if the market gives us an entry will I get in. So you have to learn to be disciplined and learn to realize there's always going to be another trade. I mean, there's trades all the time, every day. There's trades, so just chill out. The market always comes back. You're not going to miss out on anything. Don't worry about it. I mean, shoot, you're not going to miss it. So, I use TradingView for my charting, and I'm on Kraken, MK. Anyway, so right now this is looking corrective, but if we break this low and continue down, it'll be impulsive. Okay. All right, guys. It's 11 o'clock. Time for bed for me. I'm going to be up for you guys in the Telegram group just a little longer. Then I'm going to get some sleep, set some alerts for Bitcoin, and see what happens. So you guys have a fantastic night. Thanks for joining me tonight. See you tomorrow on YouTube and um, that's right. See you tomorrow on YouTube and then Sunday night charts. Don't forget Sunday night charts. We'll have a live there. Any chart, any market, and we'll do heavy TA, and I'll do it right in front of you so you can see how I think about it. Okay? All right. All right. Well, you guys have a great night. We'll talk to you later. Bye bye.